uh, Te- Gujarat International FinTech Center, which is equivalent to DIFC. So what are actually they are derivated in the foreign currency, not they cannot deal in the Indian currency there now. How does it differ from other exchanges there actually?
Okay, so effectively now the gift city, which is Gujarat International Financial Tech City, is one of the smart cities, and it is basically what has been done is this has been designated as a special economic zone. We had special economic
The
zones.
financial free zone.
Absolutely. So effectively, we had special economic zones for IT industry, for pharma industry, for manufacturing industry, and so on and so forth. But for the first time, they have announced a financial service sector or financial service industry has got its own special economic zone. Now, what has happened in this zone, which is very different, is that number one, all the economic laws which apply in India, most of it is not applicable here. So this is a much more kind of, I will say, a liberated zone. It's more like an offshore India. So to give you a parallels, like Hong Kong is part of China, but Hong Kong is considered to be offshore China. There is a mainland China and then there is an offshore China, which is Hong Kong. So India is now virtually replicating that story. China got it as a legacy because Hong Kong used to be part of the British thing until 1997, and then it got integrated into China. But from economic policy, there are two policies. One is a completely free policy and the one which is a regulated policy.
So how many companies you have attracted?
So at this point of time, for example, we launched our exchange in January 9, 2017, with the Honorable Prime Minister coming and inaugurating the exchange. And that is where he gave us the vision statement, where he said that in the next 10 years, what he expects is that India, which is again a very large consumer or a manufacturer of so many commodities and products,
the price setting model.
at least in 10 such financial instruments, India should become a price setter for the world. That is basically the vision which he has outlined for us. It's obviously a humongous vision. But in the last 4 months of our journey, we have already seen considerable progress. As we speak, we are trading roughly close to about $100 million a day in the exchange. Almost 118 broking firms have started setting up their operations in the International Financial Service Center in Gift City. Out of this, about 56 have already got the regulatory permissions to be able to do business. And 28 of these companies have already started trading on us. So you can see the speed and the speed at which the evolution is taking place. In addition, in this center, there are also banks and insurance companies which are also operating.
Are there any foreign banks?
I think at this point of time, there are 3 or 4 foreign banks which are in the process of setting it up. But at this point of time, 9 Indian banks, most of them are private banks which have actually come and set up their operations here. And I think in the next couple of years, you're going to see a lot of action, a lot of activity which is going to happen in the IFSC.
So I have one doubt. For example, the Indian Bank, State Bank of India is operating from the DIFC here, which means effectively they can also operate from the international center the same way. So they did not actually come out of India to do this business there?
Yes, it's partially true. Today, for example, the banks are trying to expand into other geographies because they are scouting for newer customers. So the front office function, which is to basically generate sales leads or origination, that will still continue. So banks will have to have their points of presence in different countries or different geographies. But what will change is most of the back-ending operations for their international lending operations, etc., that could all get set up in the International Financial Service Center. So that could become virtually a big servicing offshore kind of a center. So they could insource all their activities into this place. So the number of employees which they have to put out in all these international cities or international countries will probably reduce, and they will be able to do a lot more cost optimization in terms of running the operations.
So how can an investor actually access that market then in that case?
So as I told you, obviously all investors will have to access through intermediaries. And as we speak, as I told you, 118 companies or intermediaries are coming into place. Some of these are very large names in terms of the big banks and the big financial firms which are coming. In fact, we have been also seeing a lot of interest from international financial firms. which are also seeing that this could be an easy way to get in, because today if they have to set up an operation in India, they will have to bring in about $100 million of capital which they have to lock in. Whereas here there are no such preconditions. So effectively they will be easily able to set up this. And also one of the things which we are trying to do with this IFSC is that basically we are liberalizing the entire financial services. We are ensuring that this particular jurisdiction is a low tax jurisdiction. It has a much more friendly rules. The regulatory complexities are much, much lesser. And obviously we are also being allowed to trade round the clock. So this market is going to be open for almost 22 hours of trading, with just 2 hours for doing the switch over to the next day or whatever it is. So effectively that means that right from Japan's opening to all the way to Chicago markets closing, we will be open for business. So obviously this becomes a conducive environment to set up, to allow people to be able to hedge their risk, do risk management, trade in derivatives market on a round the clock basis. So these are all something which are path breaking from an Indian financial system perspective.
Okay. Mr. Edward, what do you think that, can you actually leverage that market actually? Now, what do you think that?
A couple of comments. Earlier, you talked about the three segments of investors, the sovereign wealth funds, the institutional investor, and everybody else. And I think what the US has done is it's taken that category of everybody else, and it said there are subcategories in there. There's a lot of light to be extracted from that third category, and they created changes to their Jobs Act this year. Was it this year or last year? I think it was this year. And those changes to their Jobs Act said that anybody can invest now into the equivalent of a crowdfunding activity. And so whereas anybody can invest through this portal, anybody could invest in the US directly into SME companies. And of course, you'll have the guy that might want to invest $50, the guy that might want to invest $5,000, then $50,000, then $500,000, then $5 million, and still at $5 million, we haven't reached the institution. So there's the differentiator in that third sector that is, I think, vast. I mean, if we use legislation and we use governmental input and we add that to investor needs and SME needs, then I think you've got the right combination of pieces of a puzzle.
No, thank you. This is about the commodities trading, as you said that, no, because are they offering arbitrage facilities here? No, so when an investor from here, can they actually access and benefit from that one through arbitrage?
So commodities markets in the exchanges is a very interesting concept. Obviously today it's a very large kind of asset class. And today in our exchange, we offer 4 asset classes. We offer commodity derivatives, we offer interest rate derivatives, we offer equity derivatives, which includes index derivatives, and we also offer currency derivatives. So effectively what we have created is a kind of a supermarket or a mall of all financial instruments to be traded under one single umbrella. So this, and secondly, there are a lot of restrictions today for foreigners to access Indian bond markets as well as Indian commodity markets. For example, the Indian commodities exchanges, foreign investment is just not allowed. Now, in the International Financial Center, they will be able to participate. So that makes it a completely different kind of a game. Secondly, when we talk about commodities like precious metals, gold, India is probably the largest consumer of gold in the world. So this is something which now a lot of foreign players will want to engage with the Indian counterparts and be able to trade in that particular market. So this is a center which we are creating out here. And interestingly, what we have done is we have strong linkages with UAE. In fact, there is a Dubai Gold and Commodity Exchange here. And we have a kind of a memorandum of understanding, a kind of a cooperation agreement with them, where we are trying to help each other in terms of business promotion and many other activities.
You mean the DGCX?
DGCX. So now a lot of people could actually look at trading in both these markets. And if there are price differences between both these markets, then obviously they will also be able to do arbitrage. Okay. That's obviously part of it. Today, the gold prices are discovered in COMEX. So people could do even arbitrage with COMEX. So effectively now this is going to become a new kind of an opportunity. Okay. Similarly, there are so many other commodity asset classes where India is very, very large user. So effectively, we think that this market itself has a size and a potential which could be extremely large.
Okay, other than gold, what are the other commodities you have? You have copper.
So at this point of time, we have launched gold futures trading, silver futures trading, and copper futures trading.
And what about the rupee futures?
So rupee futures is something which we have made an application to our regulator.
DGCX has rupee.
DGCX has been having it is the oldest exchange which has been having the rupee dollar contract. Today there are 6 global exchanges which have a rupee dollar contract, but DGCX is the biggest of them, followed by Singapore Exchange. So now in the India International Exchange at IFSC, we have also requested our regulator to allow us to do rupee dollar trading. But as we speak, we are also looking at other international class of trading, like people in, like we are looking at euro dollar trading, pound dollar trading, and so on and so forth, which again we think that a lot of traders from India who are doing proprietary trading will want to access. Because for them, accessing those international markets is going to be a little difficult. Whereas we are now offering them the products which are internationally traded also available for them through the IFSC.
Okay, to sum it up, what is the Indian economy outlook actually? What do you think?
The Indian economic outlook, typically, about 15 years, 10 to 15 years back, India used to have what we call as the Hindu rate of growth, which was like 2 to 3%, which was there. And then somewhere after the economic liberalization happened, about 15, 20 years back, the economy has started changing gears and started shifting momentum. And also what has happened is that as a country between the 3 sectors, agriculture, industry, and services, the service industry has been the most rapidly growing one. Though in terms of population and dependency, agriculture still remains very important. And India, obviously, on agriculture is dependent on the monsoons or the rains. So in a large way, our economy still has that dependency. But what we have seen is that now with the new government, which is more pro-business friendly, we are seeing a lot of focus now on pushing industrial sector as well as the farm sector to actually grow at a much faster pace. Service sector in India has always been growing at an amazing pace. So like today I just was seeing one panel on maritime activities, the logistics in terms of how underpenetrated India is. In fact, I remember that about 3 months back I was in a panel discussion and we had the minister, Mr. Nitin Gadkari, who looks after all the transportation, shipping and all of that. And he himself was saying that logistics itself, if we improve, will actually give us a 3% increase in the GDP growth. So right now we are growing at around 7.5% in terms of GDP, which I think if the pace of reforms continue, could actually even grow to 8, 9, or probably close to even double-digit growth. We are also seeing that within Asia, China is kind of a little bit slowing off, and India is actually picking up pace. So I think the overall macro factors, if you look at this, fiscal deficit is coming down. There is current account management of balance of payments is pretty good. There is a lot of competition now amongst the different provinces or the states to actually boost more and more economic opportunities. So in some sense, the polity of India is also kind of changing. Now everybody is worried about how fast we can economically grow, and the per capita has to grow. And also given that now almost 65% of Indians today are below the age group of 35, and almost 50% of Indians are below the age group of 25. So given that there is a very large young population which is coming up, which is obviously going to be very, very productive. So in that sense, the GDP growth rate obviously has to be at a much faster pace. That is, then only we'll be able to generate enough job opportunities and we'll be able to sustain the economy.
And plus the oil price continue to be actually,
Absolutely, it's
which
a
will be
bonanza for
beneficial to
India
the-
in
the
some
bonanza,
sense.
it is.
It's a bonanza for India. It's in some sense a sweet spot. But
Yeah.
obviously we have to make use of this opportunity to be able to do. Also, parallelly now with this Paris climate and all that, now obviously we are slowly making our reliability on the traditional sources like oil and coal. We are reducing the dependency and going for much more cleaner kind of energies. And obviously India has declared that solar energy, because we are blessed with sunshine almost 11 months or 12 months almost around the clock. So we are looking at that as the big source. So in the next 10 years, you're going to see a lot of change out there.
Thank you, Bharat. Edward, well, you think that the Indian the growth, which because the kind of technology you have, the kind of experiment you have with the startup exchange, do you want to tie up with any Indian companies or the SME, particularly the SME platform which BSC offers?
Yeah, I was just thinking while I was listening to that how we bridge those two things, because they're very different. You know, what we've got here is a trading mentality for derivatives and commodities, and what I do is pure private equity. It's pure private equity putting that into a platform form to allow people to participate in private equity, and there are no derivatives. You can't short a stock on my exchange. So bridging that gap, I was thinking about a conference I did recently in Norway, where we had in the room 40 different family offices through a multi-family office concept. And at the end of the 2-day event, they said to me, well, what can we do with you? Because we're doing this kind of activity. We're trading commodities. We're trading. We're doing things at a bigger level. We don't want to participate at this lower level in early stage private equity. So I came up with the concept on the stage of, well, okay, guys, if you don't want to participate in private equity at the early stage, why don't you bid on it early, subject to it reaching a point where you would be interested in it? So, for example, you have a company that starts today with its first $500,000, but in 24 months' time, it might be a company that's doing 3 million, 5 million in revenue, and it's a completely different company altogether. That institution, it would now be in that institution's sweet spot to invest in them. They're not interested at the $500,000 range, but they might be interested at the $5 million range. So I say to